Good evening, and welcome back to the channel. Today, we are taking a closer look at one of the most discussed developments in the emerging markets space, the growing tensions surrounding Venezuela's economy, the Venezuelan Bolivar, and the country's expanding oil trade activity. Over the past several months, investors, analysts, and market observers have been closely monitoring changes taking place inside Venezuela's economic landscape. While headlines have focused on oil exports, international trade relationships, and currency stability, many people are asking the same question. Could Venezuela be entering a new economic chapter after years of financial challenges? Before we begin, it is important to clarify that there has been no official announcement of a Venezuelan Bolivar revaluation. Any discussion about future currency values remains speculation, and today's report focuses on economic developments, market trends, and publicly discussed financial indicators. For years, Venezuela has been one of the most closely watched economies in the world. The country possesses some of the largest proven oil reserves on the planet. Yet, despite its vast natural resources, it has experienced significant economic difficulties over the past decade. Inflation, currency instability, reduced production levels, and changing international relationships all contributed to a period of economic uncertainty that attracted worldwide attention. Now, however, a new conversation is emerging. Recent data indicates that imports of Venezuelan crude oil into the United States increased significantly over a relatively short period of time. Reports show that U.S. crude imports from Venezuela rose from approximately 99,000 barrels per day in December to roughly 284,000 barrels per day in January. That increase has captured the attention of economists and energy analysts because oil exports remain the foundation of Venezuela's economy. Whenever oil exports increase, questions naturally arise about how additional revenue could affect government finances, foreign currency reserves, trade activity, and overall economic stability. Many observers believe this development deserves careful attention. Oil is more than just a commodity for Venezuela. It is the country's primary source of export revenue and one of the most important factors influencing economic performance. When export volumes rise, foreign currency earnings typically increase as well. Those earnings can be used to support imports, strengthen reserves, improve infrastructure, finance government programs, and potentially reduce pressure on the domestic currency. However, financial experts emphasize that increased oil exports alone do not automatically create a stronger currency. Economic history has shown that sustainable currency strength usually requires a combination of factors: stable inflation, predictable monetary policy, investor confidence, business expansion, improved productivity, and long-term economic growth. Without those elements, temporary improvements in one sector may not necessarily translate into lasting currency appreciation. This is one reason analysts continue to approach the Venezuelan situation with cautious optimism. The discussion is not simply about oil. It is about whether increased economic activity can become part of a broader recovery story. Another topic gaining attention among geopolitical observers is what some analysts have described as the Caracas model or Caracas template. This term refers to the idea that economic pressure, trade restrictions, and financial constraints can influence the economic direction of a nation over time. Supporters of this theory argue that Venezuela's experience demonstrates how economic challenges can force governments and businesses to adapt in new ways. Others disagree and argue that each country's situation is unique and cannot easily be compared to another. Regardless of which perspective one takes, there is little disagreement that Venezuela has become an important case study in how economics, energy markets, and geopolitics interact. As global demand for energy continues to evolve, countries with significant natural resources often find themselves at the center of international discussions. Venezuela is no exception. Market participants are now watching several key indicators. First, oil production levels. Second, export volumes. Third, inflation trends. Fourth, foreign investment activity. And fifth, the stability of the exchange market. Each of these factors plays an important role in determining how investors evaluate future economic prospects. The reason confidence matters so much is because currencies are ultimately influenced by perception as well as data. If businesses believe economic conditions are improving, they may invest more. If consumers believe inflation is stabilizing, they may increase spending. If investors believe opportunities are growing, they may allocate additional capital. These actions can create positive economic momentum. At the same time, confidence can be fragile. Unexpected policy changes, economic disruptions, or shifts in global market conditions can quickly alter investor sentiment. That is why experienced analysts focus on long-term trends rather than short-term headlines. Looking ahead, one of the biggest questions is whether recent improvements in oil trade activity can be sustained. A temporary increase may attract attention. A sustained increase could have much broader implications. Consistency is often more important than a single month of positive data. Investors understand this principle well. Financial markets tend to reward stability. Countries that demonstrate predictable economic management generally attract more investment than those experiencing frequent uncertainty. For Venezuela, maintaining momentum could be just as important as creating it. Another factor worth watching is international engagement. Trade relationships often influence economic growth opportunities. As countries expand commercial partnerships, they may gain access to new markets, technologies, financing sources, and investment channels. These developments can contribute to broader economic progress. However, progress rarely happens overnight. Economic recovery is usually measured in years rather than weeks. Structural reforms take time. Investor confidence takes time. Business expansion takes time. And rebuilding a national currency's credibility takes time. That reality is why experts continue to urge patience when evaluating developments involving the Venezuelan economy. Some commentators have speculated about potential future scenarios for the bolí, while others have suggested that stronger oil revenues could improve economic conditions over time. While these discussions generate interest, viewers should remember that currency values are influenced by many variables, and future outcomes remain uncertain. No analyst, institution, or commentator can guarantee future exchange rates. Responsible financial reporting requires acknowledging both opportunities and risks. That is exactly what we aim to do here. Our goal is not to promote speculation. Our goal is to provide balanced information and explain why certain developments are attracting attention within the financial community. At the moment, the key takeaway is straightforward. Venezuela is receiving renewed attention due to increasing oil trade activity and ongoing discussions about economic stabilization. Whether these developments ultimately lead to significant long-term improvements remains a question that only future data can answer. For investors and market observers, the best approach is to stay informed, monitor verified information, and evaluate developments through the lens of economic fundamentals rather than emotion. As additional reports become available, analysts will continue assessing export trends, production figures, inflation data, investment activity, and monetary policy decisions. Together, these indicators will provide a clearer picture of Venezuela's economic direction. For now, the story remains one of observation rather than conclusion. The world is watching. Investors are paying attention, and economists continue evaluating whether recent developments represent a temporary shift or the beginning of a longer-term trend. As always, we will continue following the latest updates and bringing you balanced coverage of important developments affecting global markets, emerging economies, and international finance. Thank you for watching today's report. If you found this analysis informative, consider subscribing for more updates covering global currencies, emerging market developments, international trade, and economic news from around the world. This video is for educational and informational purposes only. The content presented in this video should not be considered financial, investment, legal, or tax advice. All opinions expressed are based on publicly available information and market analysis at the time of recording. Currency values, exchange rates, and economic conditions can change at any time. Always conduct your own research and consult a qualified financial professional before making any investment decisions. We do not guarantee future results, profits, or currency valuations. Viewer discretion and independent research are strongly encouraged.